The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, David White. Once more into the breach do we go, dear friends. Well, finally, we have an answer on whether they can raise rates, and they did. The wording was fairly benign, and the market is looking like it can absorb a 0.25%, at least for the moment. Bears are getting fried. It is up 19 points on the S&P cash. Volume is actually fairly decent into 2 o'clock. I thought we'd have a whole lot less. They were playing a lot of games out here earlier in the day, and we'll get into some of those out here. But some of these stocks had light volume, and they were using the time went out without much going on to maximum effect to move some of these stocks around. The real question is going to be what happens between now and Friday. We have a ton of shorts on the wrong side. In fact, we had some incredibly heavy shorting pretty much into about 1 o'clock. And that was every time something came up, you could see people were just hitting away at these things. I was pretty sure that we'd at least go take out the early morning high, and we've done that. And my guess now is we're probably going to drift up and tag at 2,100 on the S&P cash. And that is just going to be on the backs of shorts who probably got short just a little bit too early. Of course, there's going to be volatility between now and then. But my guess is that we are going to have much lower volume every day between now and Christmas. And as that volume comes off, there's going to be a lot of shorts trying to find a home. And normally the market in an uptrend like this, at least since Monday morning, doesn't let shorts out easily when we are going into either long weekends or vacation time. I don't see why this would be any different. We pretty much got what they promised. Shouldn't be a lot of surprises. But what I kind of see, especially in stocks like Apple, which I've found very interesting this week, maybe the most interesting stock in the market, where we had a great deal of people do everything but throw mud pies at the storefronts and the Apple stores and the Genius bars, and that is incredibly rare. My guess is that they, or many, had thought that the market was going to crack and going into Monday, and there was a way of trying to hold this market back, why they were covering some of these shorts before they ended up getting squeezed out this coming day. So I'm looking for Apple probably have a pretty decent run the next couple of days, but they will continue to throw mud pies at it. Long term, I do think they are right. Short term, I think that we could see some massive moves, maybe a $5 move up between now and Friday on Apple. Look, great deal of stocks out there and probably not going to do a great deal. When I looked at options, basically a lot of indeterminate action, which means generally a much wider range. I covered it in my newsletter this morning. But as I said, kind of the top of this range would be about 2,100 on the S&P cash. I think with significant volatility, we could kind of tag that here in the next couple of days. Again, just with probably a lot of people getting short this market. At worst, I think we close out at 2,050 on the S&P cash, so I'm not expecting much, if any, downside. I do suspect, though, that we'll have a lot of people shorting, and as volume does rein in, we're going to see that go higher, kind of trickle up higher. As always, you'd like to get the party started here with a little bit of history.
That it's all just a little bit of history repeating.
On this day in 1935, a disastrous fire rages through Manhattan, destroying the New York Stock Exchange building. But Wall Street breathes a sigh of relief anyway. A strong box of documents showing who stands to gain and lose from that day's manipulation of the stock prices is rescued from the flames by a brave and or desperate broker. His grateful peers prompt him to give him a generous cash reward. So sometimes saving your own bacon even means getting a little bit more bacon yourself. As always, you can give me a call at 877-927-6648. You can put a message in the den, or you can email me at path@tfnn.com, and we'll try to get to your issue. A couple of things that we probably want to get to before we get too far into it. Solar stocks really bouncing over the last, started to bounce yesterday afternoon, really were up sharp today, like Solar City. Do I have a current quote for it? SCTY. The reason why, a deal made in hell, of course, as always, to for political reasons, to actually allow the crude sellers to actually sell outside the United States. On the opposite side, to placate the opposite side of the aisle, the subsidies back in for companies like Solar City. And I'm not exactly sure that this deal will end up being the deal, but this is why I hate being short stocks this time of year. It is and has been incredibly easy for companies to and individuals to really rip the lips off of a great deal of companies. In fact, let me get to that here in a chart up for Solar City. I'll have it up here just in a second. SCTY. But here's why I don't short stocks with 40% short interest. This thing was coming off the bottom. In fact, you know, since with the high volume low back on the 30th of November, it's doubled in price. Is it worth any more than it was before? The answer is no. These companies don't make any money. The only way that they can survive is green checks from the government. The question is, I just don't think that politically the president can sign this bill, which means this part of it goes out the other side. That is being able to export. That is one thing that the greenies do not like. They hate fossil fuels and they hate crude, and they don't want anybody using any more of it. And that will be problematic. I don't know if we're going to a break here because we messed up the clock. Do I hear any audio? Is that a yes or a no from our engineer? Okay. It says at 19. So we're going to go Oh, you know what? I did it for the second day. I had the wrong clock up. I've got to just find out. Anyway, okay, we got 4 minutes. Anyway, Solar City up on a great deal of volume. And that is, what is that? 12.4 million shares already. That actually takes you back through the congestion zone. And that congestion zone went from August all the way through October before this thing really started breaking down, when they started seeing all the problems. But again, is this just an opportunity to sell? And my thoughts would be that yes, because the president will not sign probably a bill that actually says that you can export oil, because so many of the donors to that side of the party do it. It's going to be hard. I'm not saying it couldn't happen. I just say that it would be incredibly difficult for that bill to get signed. So if that goes away, then of course the patronage and extra taxes go away for Solar City. Keep an eye on this, but it's a headline risk. I can imagine that every congressional senator and congressman that knew about this coming was probably long Solar City. And if they know this deal is going to blow up, they will be short on the opposite side. Of course, they can't be prosecuted for insider trading. Only we can. But as we continue, let's go back and check a quick look at this market. Still up 13 points on the S&P cash, 2.7 billion shares. So we're going to have a big day, and it is going to be a big day up if this holds and with significant volume. If we come in where it looks like we end the show with about 3.1 or 3.2 billion shares on the day, I think we've got something going on to the upside. And that doesn't mean that I'm bullish forever. As I wrote this morning, I'm learning to be short-term bullish, long-term bearish. And I don't think my call probably since the mid or late part of November is any different. And that is that I suspect that they're going to ratchet this market up into the end of the year and squeeze all the shorts. And there will be the opportunity to pull the trigger on being short. But I think in the next 2 days, we tag 2100. I don't know if it's going to stay up there. I can see it tag 2100 on the S&P cash and pull back 20 points in a matter of minutes. So I would be out as soon as it does. But that is my target as we go into the end of the day. And we'll continue watching. Anyway, I'll check to see if I have any new email. Okay, question is on Apple. And whether or not I see a possible $5 bounce in it the next 2 days. I certainly could. Probably not going to see a great deal right at the moment. These shorts have been all over it. And again, I suspect that they are keeping on it, not because they dislike Apple as much as they want to keep the markets down. But I have a feeling this is going to be kind of like the proverbial Dutch boy in the with his finger in the dike. We're just going to spring more leaks as this comes back around. It's flat on the day, and that is going to be problematic for a lot of people that want to keep the market lower. As I said in the opening remarks, I suspect we have a ton of people that were expecting the wheels to fall off the wagon as we went into the FOMC announcement. Now that it hasn't, what are they going to do? And it is going to be difficult. Other stocks of interest out here is just one that I put a sell order in this morning for, MBLY. I hope everybody in my newsletter had the opportunity to get out. We'd bought the 4250 calls when everything was going to hell in a handbasket on Mobileye. We'll talk about why it had the sudden reverse of fortune today when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Question in the den, and that is there a Yellen presser at 2:30? And the answer is no, at least according to their website. So we are over, and there won't be any comments, I don't think, until next month from the Fed. And we'll get a look at the notes and minutes from this meeting. It may give us a little bit, but until then, we're probably just on cruise control into the end of the year now. S&P's kind of flattened out here at 2056, 2.77 billion shares. And as I said, 3.2 billion shares by the time this show is over in the New York Stock Exchange, and it would mean that we are up on fairly significant volume. So we'll be watching that and reporting about the end of the show. Got a lot of stocks bouncing up and down, and kind of tough to actually see a real trend yet developing. We'll talk about a stock we had bought. I think I bought these on the slam down on Monday. Had bought the Mobileye 4250 calls and put out an order to sell them about 11. I didn't like the way it was acting, maybe 10:30. And of course, volume had kind of really just died on a great deal of stocks. And of course, this is a great, as somebody said in the den to me privately, so this is a good example of how to watch manipulation. Of course, very quiet, nothing going on. And of course, out of nowhere, Citron, a well-known short seller, comes out and says Mobileye is the biggest short of 2016. And of course, very light volume. But, you know, if you're somebody like Citron and you can sit on a stock like this, or you're maybe short it and you want to cover it for much higher levels, the easiest thing to do is wait until some kind of light volume event like this happens. And then if you want to buy at a lower level, just short the dickens out of it right as you come out and say, the stock is going lower. You already sent it lower. You convinced everybody else it's going lower. And guess what? You get to buy it at the low of the day, probably the rest of the day. Most people are going to be spooked out of it. But the question is whether or not anybody's going to get in it. The reason that I thought maybe it could get to 45, I have a feeling they were starting to feel a little pain and jumped all over it. What I liked about it, and just for a 45-cent call on it, was the September 11th low at 41.08 with 18 million shares. We got into that with 10 million shares on December the 11th, and that pretty much told me we were at least going to get a fairly decent bounce out of this stock. Now, what we do have today, of course, is massive volume to the downside. We're going to get that 18, I don't know. We're going to get it. We got 10 million shares already. So we'll be taking a look at it already. I also like the light volume move from the November 4th high back down to this September 11th low. It was a good-looking stock, and of course, probably just a little bit too short. Do I think it's headed lower next year? The answer is yes. But again, probably a very good example of stock manipulation in light and variable markets. The reason I bring this up is more important to show just what's going to happen probably the last few days of the year. And I think we're going to see a great deal more of this as people decide to pop on. Same thing with stocks like Solar City and some of these others. Look for some wild swings in this market, and probably not a bad deal to think about using options, especially for the next couple of days. If you want to go long something or short something, not a bad deal to buy the opposite side of that in options and just keep trading against it all day long. That way you can limit your exposure in the market, and you do that by, if you want to go long, buy some puts and maybe out of the money puts, and limit your exposure. Same way, opposite way. But at this point, I don't know if stops are even going to be good enough. You probably want to make sure that you totally have the ability to limit your upside and downside. Trading out at 2053 now on the S&P cash to 0.8 million shares. As I said, we're going to have a lot of volume up here, and they're going to have to reverse this market pretty hard into the close to get it to close negative. Keeping an eye on several of the stocks I'm interested in. We talked about Apple. Let's talk a few other ones out here. The ones leading the charge. Facebook, of course, out here with a nice little doji out here. I've been really unimpressed with Facebook since its earnings came out, and thought that this thing was going to easily dip back down. It did got back to before its breakout on earnings on November 16th. But that's it. When we come back, the last time I get to play the Janet Yellen parody, because of course she raised rates, but we're going to play it one last time.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new Yield Pledge money market account with funds from another financial institution, or deposit new funds into an existing Yield Pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their Yield Pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And without further ado, here it is.
Hey, China yelling, you got to let me know. Gonna raise or let it go. You say zero rates are mine. Is it cute for all time? So you got to let me know. 'Cause the minutes do not show. It's always ease, ease, ease. Grabbing bears are on their knees. One day it's blue sky and it's black. So if you want me off your back, well come on and let me know. 'Cause employment's gonna blow. Gonna raise or let it go now. Gonna raise or let it go now. Race, there will be trouble, and if you don't, it will be double. So come on and let me know. Disinflation bugging me. You want money to be free. There are bubbles everywhere. Do you really even care? So come on and let me know. Don't blame it on the snow.
And we get to retire that one now for the year because, of course, she finally did do it. I just wanted to listen to a couple of minutes of what she had to say. Back up at 2056 on the S&P cash, 13 points higher on the S&P cash, 2.9 billion shares on the New York Consolidated Tape. as I said, if we're looking for this to be a confirmation of volume higher, going higher, all we need to do is see this end up being about 3.2 billion shares by the 3 o'clock hour. And I think we're going to see that. So a great deal of volume. And as I said, I'm thinking we're going to go tag 2100 here in the next couple of days and make it life a little bit tough for the shorts out there. We talked about Facebook. I wanted to see how some of these stocks were doing. And of course, let's get a current quote just to make sure everything is going good. But yeah, I mean, it's up $1 from yesterday. Not a lot of these big stocks really giving us a clue that, you know, that these things are going to be the ones that run in the S&P 500. Kind of tepid, let's put it that way. Same thing with stocks like Amazon, not giving us a very big clue. MZN. And take a look at it. But Amazon at 665. This thing's been all over that 666. And heard too many people talk about this as the sign of the devil. Don't know about that, but certainly we're not seeing a great deal of movement out of the market in Amazon. But I mean, I'm wondering if we should have expected it. What we did have, of course, is a push lower down to 659.37 earlier in the day, and that was just to really kind of push this thing into the dirt. But it's recovered. My guess, too, that there are a lot of people short Amazon. For the gods, no, I have no idea why. But I think we might be able to start seeing a top form in Amazon in the last week and a half of the markets throughout the day. Let's take a look at, we took it Facebook, Amazon, take a look at Google L real quick and take a look at that. You know, and don't see, again, in these FANG stocks, not a lot or not as much movement as you would think in the NASDAQ. And maybe it's because of Apple. Apple 110.18. They may be trying to hold these down to, as I said, Apple's movement and the massive bear move on Apple, I think is an indication that Wall Street is leaning toward the bearish side. It's just probably the market's just not ready yet. If you are starting to build big bearish positions on stocks, and you're a big whale on the New York Stock Exchange or on Wall Street, it takes a while to develop these big positions up. You don't want to hammer on it all in one day and end up with a much lower entry price on your short operation. And we'll probably start seeing a few of those. Had a question to look at the IWM real quick, IWM, and see if we see any movement in that. It's up 70 cents. It really didn't have that much of a range out here. Got to 114.04. What you have to think about in IWM is it bouncing off this gap of the October 5th day on 45 million shares. Did test it with 53 million shares, but rejected it. And that's why I'm thinking maybe we get some nice moves in the next week, 10 days to get this thing back up, maybe 115, 116, see the very light volume all the way through the end of the year. And that sets up my ABC on the way down on some of these stocks like the IWM. In fact, looking at a lot of them that continue to set up that way. 2055 on the S&P cash. Wanted to look at a few other stocks out here and see how they are doing that hit my scan. Some of the stocks that are probably the weakest are Chinese stocks. TripAdvisor's TRIP, the symbol, is starting to look pretty sweet. And that's why I'm thinking that, man, if I can just hold back the desire to short this market for a couple more weeks, I think we've got some, we're almost going to be playing T-ball here. And what you like in TripAdvisors, or at least I do, is this 724 gap down that had 7.2 million shares. So pretty good gap down. right? You get the huge volume spike back up to that level through October 19th. That big spike was almost 20 million shares. But now as we get back up to those levels, yesterday 1.6 million shares, today 900,000 shares, and that's what we're going to see out here. But this thing's a gappy little sucker, and there's maybe two gaps inside this big gap. But we've got a lot of three gap plays setting up in these. I would not be surprised to see the biggest weakness as we come back from the first of the year in these Chinese stocks. Other stocks of interest out here. VIPS, another one from China. This one's setting up probably an excellent ABC down. I don't think you will be able to find shares to short this, nor would I be shorting a $17 stock. But we talked about this stock maybe 3 or 4 times. It is talked about in many circles on Wall Street as possibly the biggest fraud stock on the Chinese stock market. It's called VIP shops, VIPs. Anyway, a nice gap up. And of course, they came out and said that their earnings weren't going to be as good as they thought back on November, what is that, the 13th. So this thing came down pretty significant volume, bottomed out on the 16th on that Monday thereafter. It's been moving its way back up here. And again, if you're short, you got to cover your shares eventually. But boy, talk about a stock down on heavy volume, which was about almost 100 million shares on that day, the 13th. Was that a Friday? Friday the 13th? Did that get hit? I'll have to check that. Anyway, back up on the other side, but the very, very light volume out here, 3.5 million shares. Now, could it come back and fill this gap? I would love it to. Too bad I can't get shares of it too short. VRSK, another one out here as I'm watching for these to size themselves up. This one gapped down with massive volume on the 28th of October. 7.4 million shares. We're back into it with 1.3 million shares yesterday, and it's just 700,000 shares so far today. So we'll continue keeping an eye on it, and that will be interesting. Strategery. I don't know what that is. Okay. And Clack wanted to see some of these other stocks. Again, we were talking about some of these just hanging up here at the highs. Not a lot of movement so far in KLR 10 core, although the SOX and the XMHs, I think, have already given us the signal that they're done. We are just waiting for these things probably to come back and retest the highs. Maybe this is ABC down, but I would love to see one more test, maybe with about 1 million shares in that $56 range. But the energy up and down has gotten fairly rarefied in the SMHs. Let's take a quick look in the SOX for the same thing. Not a lot of bounce out here. So probably the SOX and the semiconductors probably have topped out the first in a lot of these sectors. But as I said, we're going to have light volume. We're going to have that now until the end of the year, not the end of the day. We're already turning 3 billion shares, by the way. So if we go up here today, it's going to be hard to say that we didn't go up on heavy volume. 2057 on the S&P cash as I speak. Anyway, as I said, this may be the weaker of the sectors. And along with maybe some of the semiconductor manufacturers that are in the Apple supply line starting to guide down, probably going to see that ripple effect through the rest of the market. And, you know, if we were just looking at this on a shorter time scale here, take a look at that. You know, you may be looking at, 92.50, something like that. Might be a 618 of this last move. But you get into that and you hold it with maybe 250,000 shares a day the last few days of the year. That may be a very good sign to be on the short side then. JCPenney caught my attention just because this thing is auguring itself back down. Retail sales do not look that good. Amazon is eating the world. But not a lot of volume over the last couple of days compared to the massive slam down that it had on the 13th of November. Got into it with 19 million shares from 79 million shares. Don't know if J.C. Penney's going to last 1 or 2 more years, but my guess is that they're on the road to doing the exact same thing that Radio Shack has done and several other of these big mall stores. The thing that you have to say is that a lot of these are on and in very good support levels. It's going to be hard for stocks like J.C. Penney to be really hammered down a great deal lower. There it is. Okay. Wanted to see anything else real quick. Question to look at gold. A burl. I don't know what that is. B-U-R-L. Burlington? What about it? B-U-R-L. We have a phone call or do we have somebody call? Let's see. Burlington stores. Our engineer is passing something along. I'm not exactly sure what it is. Burlington, B-U-R-L. I don't know. Going back to test the November 13th low at $39.40. So just going to retest its low out here. I don't see a whole lot in this stock. I'm not exactly sure why he brought it up. Heartland Express. Now this one's kind of a longer chart, but you've got to actually see this as a complete pattern finally. And that is this huge gap up that goes back from the 12th of November in 2013. Massive volume up at 3.75 million shares. We are back into that level, of course, with just 820,000 shares a few days ago. Kind of a little bounce out of here, not a lot of volume. But there are some stocks that are pretty much washed out. And the question is, why would these transportation companies be doing so poorly out here as we get back in to the end of the year with fuel getting it cheaper by the day? It continues to be problematic to see these stocks much lower. And as we go to break, I wanted to remind you that your time is running out to get those Tiger Dollars. Go to the front page of TFNN and check them out. But boy, you got to have that done by the 21st. Like I said, time is running out. Check them out.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we get ready to close out, of course, the market's starting to drift higher. And we'll see it probably go hit that 2,100 mark over the next, 6, 8, maybe 10 trading hours. I think it's going to be very difficult for anybody to go home short into Friday as this continues to go higher. We were talking about the numbers that we wanted to see for high volume going higher. 3.1 billion shares already, so I have every confirmation that I need to say that we are going higher with volume, at least for the day. A day does not make a market, so I'll give you that. I also suspect that we are going to drift into that 2100 with significantly lighter volume. But again, that is the problem out here, is just how are you going to sit through the next couple of weeks with a market that probably is too short for conditions, and shorts are just going to have to slowly come out and do it. A good lesson in also probably not being as short for very long, a market where everybody else is incredibly bearish. I think we brought that up on Monday, and that is probably the best advice I have ever read about being short, and that is Jesse Livermore's book, A Reminiscence of a Stock Operator, where he said if sudden demoralization suddenly develops, then get out of all your shorts and quickly. And I have to say that probably in a Friday and Monday, I found just about as much demoralization and emails to me from subscribers generally kind of back that up, where everybody's pretty sure that the market's going down. I kind of look at that as a contra indicator. Again, you want to be greedy when everybody's fearful, and you want to be fearful when everybody is greedy. My guess is that we're going to have a lot of greed going into the end of the year, and that's where I'm going to be most fearful. Wanted to look at some stocks. that were out of that. Hang on just a second so I can find them. I wanted to see how some of these other solar stocks were reacting to the news that the green checks may be coming back to them. CSIQ, let's take a look at that one. You know, pretty nice bounce out here. Let's get a little tighter shot on this. You know, this thing's been making ABCs off the bottom of $14.16 from August 24th, like a lot of these stocks did lower out. Tried to get back down into that candle on September 28th, did so on 3 million shares, so lighter volume. Bounced once again, got up, and actually had a high volume spike out here, and that was on the November 10th high. So this thing was going to need some juice. Actually started seeing that yesterday afternoon when word started to leak about the congressional information about them trying to pass back the subsidies to solar cell suppliers. So volume did pick up as it broke through that previous September 10th high, which probably didn't think that it was going to have much volume. Now today, again, we had a huge spike to 29.50, and the real problem with being short, massively shorted stocks like Canadian Solar today is a good example. Let's see if we don't have a couple more of those out here. Let's look at the index, which is TAN. I don't think that there's probably a real long-term change in it. If you're unfamiliar with it, TAN is the ETF for these. It's going to just kind of get back up there. It's a light volume ETF a lot of times, so not a lot. You started seeing probably what I didn't hear, which is a great deal of that volume coming back in. Probably in the, what is that, the 4th and 5th of this month. I probably should have paid a little bit more attention to it. In the meantime, sell when you can, not when you have to. Also cover when you can, not when you have to. A good day to do so. We'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.